Yes boys, so today we're going to go over a very high win rate model and how it's made me money in the markets and how it could potentially make you make money in the markets. So without further ado, let's get straight into it. So number one, we're looking at the higher time frames to get our initial bias going into the day. So we're looking at the daily time frame, the 4 hour time frame, and the hourly time frame. I'll we'll go over it after I explain this, but for number two, we've got a liquidity sweep. So obviously price takes a high, takes a low. Number three, we need to invert a fair value gap opposing to our bias. So if we've got a bearish bias and we see a bearish model forming, we need to invalidate a bullish FVG to the downside. And last but not least, we need a change in the state of delivery. So literally, if we're looking at sells and prices moving up and up and up, we need to violate an up close candle to the downside, as well as inverting a bullish FVG. And then we can either enter off of that, or we can enter off of the return to the order block, or even the inverted fair value gap, just whatever works for you. Then as soon as you enter, just target the opposing liquidity. So let's take a look at a trade I took today using the model. So fact first, let's go over the bias. So if we get a look on the daily time frame, see straight away that opening up today, we're inside of this small bearish fair value gap, and we're inside of this order block here. So drop down to 4 hourly, we've got this huge bullish fair value gap that we're looking to rebalance. Obviously on the hourly, that would be this one here as well, and obviously this low and these equal lows here. So if we go to the 1 minute time frame, see where we got with NE. So obviously 9:30 opens and we're absolutely dump. Get consolidation here, which is where I'm not looking to trade at all, to be honest. And then I see this high here get swept, and then at the same time we form bearish SMT divergence. If we take a look at ES, ES takes the high and NQ does not. So there's like an extra confluence, and then we violate the swing low to the downside with displacement. We invalidate this bullish FVG, and we got a change in the state of delivery. You could enter here if you want, but if you want a better risk to reward ratio, you could enter on the return to the order block, or if you want an even better risk to reward, you could enter off of the inversion fair value gap, but obviously in this case it does not get tapped into. So obviously majority of the time, if you're looking to enter off of the inversion, then you're not really going to get tapped in as much. So that's why I was looking at the order block instead of the inversion fair value gap. So I entered off the order block and target these equal lows, and as you can see, we just rip down and smash TP. Very good setup today. In fact, it was a really good setup. Literally every confluence that we need. We even got equal lows as a target, which to me, equal lows is just like an extra confluence. So yeah, that's essentially the very high win rate model. Obviously back test it, forward test it in with a demo account before you go in with live money, or on your funded account, whatever works for you. But yeah, it's a very good model.